when we are asked to calculate the retained earnings section, okay, they have asked us to calculate the retained earning at the end of the year. End of the year, that means they have asked us to calculate retained earnings on the last date. So whenever we have to calculate retained earnings on the last date, what do we do? In our current year's profit, that is profit after all the adjustments, we will add the retained earnings that we have brought down, and then we will get the retained earnings that we have to carry down. Okay?
Yeah.
Okay. So look over here. You start with your profit and loss appropriation account.
Yeah.
You start with your profit and loss appropriation account. That means you start with profit, operating profit for the year.
Yes.
We have already given you the operating profit for the year. That is 28,000.
Yeah.
We have already given you the operating profit for the year 28,000. Now, this operating profit is always after two things. What are the two things that it is after? This operating profit, that is 28,000.
Yeah, debenture interest.
It is always after debenture interest, and it is always after preference dividend.
Yeah.
From this, you will subtract two things. That is your transfer to the reserves and the dividend paid or proposed for the current year. Okay? Paid or proposed dividend for the current year. Profit for the year minus all the appropriations that you made, you get the retained profit for the year. In this, you add your retained earnings, you will get the retained profit carried down. Okay? That is the retained on the last date, which will appear in the balance sheet.
Yes, miss.
When you find your shareholders' funds will be ordinary share capital plus preference share capital plus the general reserves plus the retained earnings.
Yeah.
So retained earnings, this part, it is always after you get the P&L appropriation account. You will get it from the P&L appropriation account. But you will not write P&L appropriation account. Can you please repeat for me, how will you get the retained earnings on the last date?
Yeah.
But can you please, how will you on the last date?
Yeah, so basically, first you will take the profit that's the operating profit, which is 28,000. You will subtract the transfer to general reserve, that's 5,000. Then you'll, like in this sum, there's no proposed ordinary share dividend. So you'll only write the paid one, which is 4,500. You subtract from that. That'll give you 18,000. 1 second. That'll give you 9,500. Then from that, you will add the retained earnings that were carried down, and that will give you so 14,000 basically. So you'll add 9,000.
Write the retained earnings that is brought down.
Yeah, 14,000.
Carried down.
Sorry, carried down. Brought forward. Retained earnings brought forward is 14,000, and you'll add that to 9,500. That'll give you 23,500, and that's the retained earnings carried forward or carried down.
Okay, very well. 28,000 minus 9,500 will give you what?
9,500, no. Miss, 20,000 minus 18,500.
No, this is 9,500, right?
Achha, oh yeah, sorry. That will give you 18,500.
Then you will minus what? Retained earnings brought down.
Yeah, then you will minus retained. Yeah. No, 1 second. You have to minus the retained earnings now. Brought forward.
Retained earnings brought down. That is the first make a 2019 retained earnings. You will add. Okay. So 18,500 plus 14,000. It will give
अच्छा
you
you have to add, yeah.
2,500.
Yeah,
32,500. This is nothing but the retained profit that you're going to carry down. Okay.
yeah,
On which
yeah.
date do you carry down this retained profit? On the last date.
Balance sheet. Last date, yeah.
Last date is 30th April 2020.
2020.
So this format should be very thorough. When you have to find out the retained earnings, you should know from where to start and where to end.
Yeah,
Okay. What are you supposed to make over here? A statement of financial position. First, you mark
yeah.
on that trial balance that is given to you. Where will all the things go?
Okay.
So fixtures and equipments at book value, where will it go? Non-current asset. Motor vehicles, non-current asset. Inventory, bank overdraft, current liability. Trade payables, current liability. Current assets, okay. Provision for doubtful debts. Now see, remember Sidra over here, no.
Yeah,
The provision for doubtful debts it is giving over here. Now how will you come
yeah.
to know whether it is old or it is new? Okay. If it is given as a part of adjustment, it is new.
Okay.
But here, can you see any adjustment related to provision for doubtful debts?
No, then it's old.
No. If there is no adjustment related to provision for doubtful debts, then this is not even a trial balance that is given to us.
Yeah.
Trial balance, no. Then in that case, you will subtract this 630 of provision for doubtful debts from your trade receivables.
From trade receivables, yeah.
Arrow from provision for doubtful debts to trade receivables.
But you will subtract now?
You will subtract. An ordinary share capital is capital. Very well. Okay, here will you tell it as capital or will you call it as an equity, Sidra?
I think shareholders equity.
Not shareholders equity, you will only call it as equity.
Okay.
Now, so remove that word and you write equity. Now, the other thing that you have to remember is that when you're making the balance sheet, always see whether you want to follow the normal total asset equal to total liability or
Yeah.
method.
No, miss, I'll follow total assets, total liabilities.
You follow total assets, total liability. Is there any other adjustments that you have to do in these things that is there?
1 second, I'll just check. Yeah, miss.
Is there any adjustments for prepaid, accruals?
No. Prepaid and all is not there. No, no. No.
Nothing. So that means you just have to copy and write. Now when you
Miss, miss, where will general reserve go? You have to make that like equity thing now, equity and reserves wala column in this.
funds, no, shareholders funds is made up of what?
Reserves, general reserves,
General reserves,
share, what was that? Ordinary shareholders dividends.
general reserves, retained earnings, and preference share capital. Now you have
Yeah,
only one share capital, okay? So what
yeah.
is next to that question that you copied now, right? What your shareholders funds is made up of? You don't have two capital, you have only one capital. What is the name of
Yeah.
capital? Ordinary share capital.
Ordinary.
Okay, ordinary share capital, right? Ordinary share capital. First will be the capital, then will be the reserves. So first you have ordinary share capital, then you have the general reserves, and then you will have the retained earnings. Okay. Now general reserves, look properly that this year you have transferred 5,000 to the general reserves. That is your
Yeah, so we'll minus 35,000 में से 5,000 ना. So yeah, 30.
your old general reserves as 35,000. Can you please highlight it?
Okay, one second. Yeah.
Okay. Your old general reserves is 35,000 and this year you transferred more 5,000 to your general reserves.
Yeah.
You removed it from the retained
Okay.
earnings and you transferred it to general reserves. Can you please
Yeah.
explain that point?
Yeah, miss. So you will add it to 40,000.
The 35,000. So your general reserves is made up of two parts, 35,000 plus 5,000, 35,000 plus 5,000, 40,000. Very good. Retained earnings you've already calculated on top that you're going to carry forward. Yes.
Yeah.
Written there carried forward. I want you to write the date. Carried forward
Oh,
retained earnings
okay.
last date. What is the last date? No, not year beta on top.
Miss, where? Acha, okay, you're okay.
So carried forward is on what date beta? 30th April. No, you will write 30th April 2020. And brought forward is the first date ka thing. What is the first date?
First date is one second. Jan. No, Feb.
Read,
20.
read. You put
Sorry, May
down.
2019. May 2019.
So you always make sure that you work with dates. Okay.
Yeah.
Now go ahead. Now this three thing comprises of your shareholders funds, which is nothing but your equity. Add the three things: 1,50,000 plus 40,000 plus 32,500. Shareholders funds and write equity next to shareholders funds.
Okay.
Okay, very well. Okay, so this is your equity. Can you please repeat what is your equity made up of?
Yeah, shareholders' funds or equity is made up of ordinary share capital, preference share capital, plus general reserve. General reserve, like in that, there'll be plus the transfer to the general reserve. Then you'll add retained earnings that you found out from the PL appropriation account, and that will give you the shareholders' funds.
Okay. Now you have to make the balance sheet. Okay. When you
Yeah.
question, did you see any provision for depreciation on your non-current assets or depreciation?
Um, Depreciation. Um, no, miss.
No. Very well. So your non-current assets has nothing to minus cost minus depreciation to date gives you net book value. There is nothing like that to do. Very good. So you will directly put it in the outer column. Okay. Now see, they had given you a hint next to motor vehicles. They had given you, and next to fixtures and fittings, they had given you this is the book value. Please highlight.
Yeah. Yeah, miss, one second.
That means they had already given you a hint that what they are giving you is the net book value.
Yeah.
So now this is your non-current assets. Underline the non-current assets. Before writing the non-current assets, Sidra, you always have to write on top that this is the asset section that you are making.
Oh, yeah. Okay. I'll-
Okay, fine. After the non-current assets, what is it? Current assets. Okay, capital A. Use capital A. Current assets.
Miss, only these three things are there now
Hmm?
in current assets.
Yes. And you don't need to write closing inventory. They gave you inventory. You also write inventory.
Okay. Miss, but if I write, will they cut my mark?
No, they will not cut your marks.
Miss, I move ahead.
Sorry. Yes, move ahead now.
Okay.
See, now the 2,73,600 is your total assets. Please mention that.
Yeah. Yeah, yeah. Miss, what do I start with?
You will start with liabilities. Liabilities, you're doing the total assets and total liability approach, right?
Yeah, okay.
So since you're doing total asset, total liability approach, now you will write capital and liabilities. Remember, you're doing the limited companies. Limited companies, you will call it as equity. No, Sidra.
Okay,
This
sorry.
equity and liabilities. Heading
Equity.
not capital and liabilities, equity and liability.
Okay.
Another thing, because it is equity and liabilities, now you've written it that first you have to write the equity.
Yeah.
The first heading would be your equity.
Okay.
Equity is nothing but your shareholders' funds.
Yeah. So I write underneath.
Your share equity means shareholders' funds, that is assumed. Now, what
ठीक है,
is
okay.
equity made up of? You calculated on top.
Yeah, that. Okay, fine.
So you can just copy paste it.
Okay.
Not the shareholders' funds. No, 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 no. Oh, thoda. You have an option to
Yeah.
write all this in the third column or add all this in the second column and take the total to the third column. This is fine.
Yeah.
No, no,
I
that is
know. Yeah. Yeah. Okay. Yeah.
this is your equity. Then the non-current liability and then the current liability.
अच्छा, okay. Miss, can I write shareholders here?
No, equity.
Okay. Oh, non-current
I they won't deduct your marks, but I would prefer that you stick to equity.
equity. Okay. 5% debenture.
Now you've left unnecessary lines in between. Try to accommodate your answer in that lines. Now it's fine. So this is your total equity and liabilities.
Yeah, miss. Done.
Okay. So your balance sheet is telling that means your total assets is equal to your total liabilities. Done. Okay.
Yes.
Now move ahead. Okay. Now the theory question. They are considering, the directors are considering to use general reserves to repay the bank overdraft, the negative bank balance. Tell me, why is it not appropriate to use general reserves to repay the bank overdraft?
1 second. Maybe because it reduce the cash flow in the business. No, the 1 second. It'll reduce the cash available in the business.
Okay. Do you think profits and cash balance always are the same?
No.
Yeah?
No.
You may have profits, but you may not have cash, right?
Yeah. Yes. Yes.
So, because general reserves, what is reserves? Reserves are profits kept behind for some
Yeah.
purpose. Okay. So tell why it is not appropriate to general reserves. One possible reason could be general reserves will not necessarily be matched by the cash balances.
Yeah. General reserve. Miss.
General reserves will not necessarily match the cash balance. Will no, you cannot, may not necessarily available cash balance.
Yeah, Miss. Done.
Okay. Just 1 minute, I go to the wash. You have to calculate the return on capital employed and the return on capital employed up to 2 decimal places. What is the return on capital employed formula? It is return upon what is the capital that you have employed in the business. Matlab, on using how much capital, what is the return that you're getting? Okay, so are you getting 28,000 return or there is something else? Please go and read the question, just scroll up.
Miss, profit before tax now.
Oh, better. Go on the question. What is the meaning of return? On go scroll more top. What is the meaning of return? The meaning of return is what is the profit that you are earning. Okay. Beta, that is retained earnings. That is last year's profit. Okay. Company is making a profit of 28,000. But this profit is after charging debenture interest. That means company made more profit than 28,000.
So 25% of 28,000 you will subtract from 28,000.
Profit. Can you please stop sharing your screen? Return on capital employed is return on capital employed. Is that how much return are you making? How much returns you are getting? That means how much profit you are getting on the amount of capital that you have employed in the business, right?
Yeah.
Profit of 28,000, but this profit is after interest. That means
Yeah.
profit that I actually made, the profit that I actually made is 28,000
Yeah.
plus the debenture interest.
Plus.
Yeah.
Why will you plus what?
20,000 is the profit after debenture interest. Just think like this: gross profit, add income, less expense.
Yeah.
And in that expenses, there was debenture interest also.
Acha, okay.
Then you got the profit after the debenture interest.
Yeah, so you'll minus now.
This you got after minusing debenture interest.
Yeah.
So what was the actual profit that you made?
28,000 plus the debenture interest.
1,000 plus the debenture interest. The debenture interest is 5% of the debentures. So 5% of 20,000.
29,400. 29,400.
5% of 20,000 is how much?
Acha, 20,000. I'm sorry. 1,000.
That you are getting is how 28,000 was the profit before the debenture interest plus 1,000 debenture interest that you had already minus, but you're adding back to know actual returns that you made. Okay.
Yeah.
Now capital employed. We'll come up to capital employed. What is the meaning of capital employed?
Total assets minus current liabilities.
Meaning, I'm asking you the meaning.
Or the amount of capital employed in the business.
Amount of capital employed in the business. You said total assets minus the
current liabilities.
But do you think you have an easier way out? You know your equity, right?
You can just take the this
plus
thing.
your non-current liabilities.
Yeah.
What is the total of your shareholders' funds?
22. Sorry. 2,22,500.
2,22,500. And what is your non-current liability?
20,000. So 2,42,500.
Yeah, 242,500. So your return on capital employed is how much? 29,000 upon what? 242,500. Your the capital employed that you got was this only 242,500.
1 second. Let's 22500 plus 20. Yeah, 24,500.
Now the return on capital employed is how much percent? 11.958% you're getting. 11.958, so it comes up to 11.96%.
96%, yeah.
Okay.
Yeah, miss.
20 paper 21. Now proceed.
Miss.
Yeah, tell me.
यहाँ नीचे भी एक चीज है.
They're going na. The directors are considering to increase the dividend in 2021 as a way of increasing return on capital employed. What is the return on capital employed that they are getting? They are getting a return of capital employed at 11.96%.
Miss, 1 second. When I did the calculation above, it's giving me 12.12.
How 12.12? It was 29,000.
Miss 29,400. No? Achha, sorry. My bad. Sorry. Yeah. Got it.
Okay.
Yeah.
So the directors want to increase the dividend in 2021 as a way of increasing return on capital employed. Advise the directors how the return on capital employed can be increased. How can the
Yeah.
return on capital employed be increased? One thing, if the profits will increase
Yeah.
the profits. If the profits will increase, the return on capital employed will increase.
Yeah.
Or the other
Yeah.
way to get a more better return on capital employed is employ
Reduce.
less capital,
Yeah.
and increase the profits. And
Yeah.
profit. So another way to
Yes.
get a better ROCE is reduce the capital employed.
Yeah.
Another way, these are basic things, okay? That you should
Yeah.
know that how to get a good return on capital employed. Either you increase the profit or you reduce the capital employed. Or
Yes, miss.
another way, you use your capital employed more effectively.
Yeah.
But if you write these three statements,
Hmm.
how much marks you will get?
3 marks.
How many marks you want?
5.
Okay. So that means now you need to expand your ideas.
Yes.
The directors you have to advise. Increase the
Yeah.
you reduce the capital employed or you use capital more effectively. So there are ways
Yes.
to increase capital. What is the ways to increase the profit?
Reduce. Acha, increase profit. Oh. Ways to increase profit. Reduce expenses.
Reduce expenses.
Yes. To reduce the capital employed. Um.
Give two points now. Reduce
Acha, okay, fine.
expenses, increase other income.
Yeah.
Reduce expenses and increase the other